Back with us here on Chartbusters, onto some primary market action which has been buzzing over the last few days. Logistics company Western Carriers opens its 492 crore rupee issue for subscription today. The subscription will close to the public on the 18th of this month. Now, to discuss the company's post-IPO strategies and the growth plans ahead, we are being joined by the whole-time director and CEO Kanishka Sethia, along with the chairman and managing director Rajendra Sethia of the company. Gentlemen, good morning. Thank you so much for joining in. I'd want to start off by asking you about the growth trajectory of the company. Your 3-year CAGR for revenue has been around about 4.6%, lagging peers. What could you attribute that to, and what is the kind of growth that you are penciling in for, say, the next couple of years?
Thank you so much for this opportunity to be with you. A very good morning to you. So we've been growing steadily, and we hope to be growing steadily going forward as well. The industry's had some headwinds, especially from the Middle East due to the export volumes due to the Middle East crisis. But once the things resolve, the volume should pick up. And we've been one of the bellwethers in the multimodal integrated supply chain solution space. That's a space which is growing as the economy is growing. I think as an industry as a whole, we have a huge amount of headwind to go forward in the future.
Right. You said that the industry has been facing some headwinds, and as a result of which the growth over the last few years has been subdued as well. But in that as well, Kanishka, if I may say, you have been lagging all your other listed peers too. So 4.65% revenue CAGR is a lot lower than even what the GDP grew over the last 3 years on a compounded basis. So two-part question here. What is the growth likely to increase to, if you could break that up into realization and volume? And the second part, in your DRHP itself, you've written that you are looking to increase your operating margins. So how much improvement can we see in your operating margins from the current 8.5% that they are at?
Good question, sir. Actually, our EBITDA numbers are just shy of 9%. We've been improving our profit margins incrementally over several years. That's a factor of several things, including, better efficiencies, better supply chain management, greater volumes, which have been helping us consolidate our play. We are hopeful that if things remain good for the industry as a whole, the profitability should increase. And we are seeing, positive signs of growth in all clusters that we work in, sir, including metals, where we have a dominant position, FMCG, pharma, industrial chemicals. So we hope for the industry as a whole, things are going to improve. One of the factors which is really helping, I would say, the growth of supply chain and 4PL is the fact that the amount of investments that the government has done in the recent past in several initiatives, including the multimodal logistics parks, direct delivery from ports, as well as the dedicated freight corridors, the eastern as well as the western. These are, basically factors which are great enablers for the industry. And we are hopeful that being in a dominant position in this niche, we should be able to partake of the growth coming in the future.
Let me bring in Mr. Rajendra Sethia into the conversation as well. Mr. Sethia, I wanted to ask you actually a two-part question. Firstly, why is your cash flow from operations lagging the EBITDA growth? Also, the fact that there have been a huge increase in receivables ahead of the IPO year. That's part one of my question. Why is that so? And part two of my question being, your working capital days in FY24 has been 96 compared to around 58 in FY22. And what is your outlook on the working capital days going forward as well?
Thank you very much for giving me the opportunity to be with you on your channel. And so far as all these financial numbers are concerned, I will ask my CEO to give you a proper reply in this with the numbers.
All right, Kanishka, would you like to answer that?
Happy to take that question, sir. So the receivables has increased slightly over the last year. This is primarily because of the number of new projects that we've started. We are on the cusp of initiating a few new projects in the domestic cluster, which have initiated. That's taken the working capital days has increased. The working capital for the industry as a whole, sir, increased post-corona because the principals at that time faced strong headwinds. It has started to improve now from this year onwards, and we hope that in the next 2 or 3 quarters, you will be able to see an improvement in the receivable cycle. So what was the second part of your question, if you could please repeat?
The second part of the question was, why is your cash flow from operations lagging the EBITDA growth? What would you attribute that to, and do you see that improving going forward as well?
So the cash flow, sir, whatever we generate, most of it is going back into the business, sir. And we are hopeful that, given the strong surge in economic activities which is happening, we should be in a position to keep on reinvesting whatever cash flows we generate, sir.
All right. While you are speaking about strong growth prospects of the industry and margin improvement, etc., you're shying away from giving numbers, and we get that because ahead of the IPO, you don't want to keep the regulators or the bankers or everyone on the wrong side by projecting forward-looking numbers. But what really stands out as red flags, and I'd like either Mr. Rajendra, Sethia or Kanishka, you to answer, is the kind of related party transactions that there are and the money that is being paid both to Rajendra and Kanishka of the company itself. Let's point some of them out. Rent paid to promoter Rajendra Sethia in FY22 was just under 1 crore. FY23 moved to 1.4 crore and FY24 that number moved to 1.6 crores. Remuneration paid to promoter Rajendra Sethia was 1.2 crore in FY24, which doubled from what it was in FY22. Add to that, there's 1.5% of profit coming in as commission for both Rajendra Sethia and Kanishka Sethia. So if you add both, the rents paid to promoters along with remuneration paid to promoters and the commission paid, it's nearly 10% of your FY24 profits. That is something that leaves, a bad taste in the mouth of investors. What are you planning to do about that? Mr. Sethia, you can go, Rajendra, you can go ahead with it.
Basically, this is where we stand as of now, but as the profits will keep on increasing based on whatever we are doing and whatever our plans are, our withdrawals will remain the same, and you will see that there will be a big fall in profit vis-a-vis whatever we are withdrawing now.
Why are you drawing so much money from the company right now? And if profit increases, so does your commission, because commission is as a percentage of net profit, 1.5%, both for you and Kanishka. So together 3% goes out straight as commission.
So, sir, I would like to come in here. Rentals is basically, we were a proprietorship company when we were founded in 1972. We converted into a limited company in the year 2011, 2012. So whatever were the rental incomes are basically of properties which were belonging to the promoter, hence the rent is being paid. The rents are all as per market. If you look at the total rents that we are paying, being an asset-light company, is extremely low given the size and scale of our businesses, sir. The salary which is being drawn is also very commensurate to what is being paid to the management. It's actually maybe on the lower side compared to the others, listed peers. And we are very focused on growing the business, sir. We are very focused on keeping our business very asset light, keeping our focus on creating supply chain solutions for our customers where we are able to add value to their supply chain, sir. Our main mantra remains that we have to focus on creating value for our partners by doing the entire complex supply chain solution pie for it. And we are 100% focused in this. We do not want to lose our focus on doing anything else. All, disclosures have been made completely in our offer book. Everything is very transparent, sir.
Right, which is what leads me to the final question from my end before Hormas takes over on the margin and growth outlook here as well. The promoters, both of you all were directors of Western Conglomerate whose shares were suspended from being traded on Calcutta Stock Exchange when you guys were directors. What exactly happened out there?
So it was a documentary lapse from our side. We've already taken care of it. The entire disclosure with regards to Western Conglomerate is also available in our offer documents, and all disclosures with regards to it have been made, sir.
All right, Mr. Sethia, thank you so much for joining in for both of them, and wish you good luck for the IPOs going forward as well. We look forward to chatting more with you guys on the listing day. That was the management there of Western Carriers, the IPO, opening for subscription today, the price band of 163 to 172 rupees.